It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Welcome to October, Thursday evening, October 1st, 2015, and we started this month and this fourth quarter with a bang. Well, we were kind of expecting a little bit of a statement day today, and I'll tell you right now, between crude oil and the S&P, I don't know which one made the biggest statement today. Boy, oh boy, oh boy, do we have a jam-packed newsletter in store for you guys and gals. As you know, well, maybe you don't know, but tomorrow is Non-Farm Payroll Friday. So our plan is to get in early and get out early ahead of that slop and chop gambling session that happens after 11 o'clock tomorrow. I'm going to talk about that in just a moment. Crude oil this evening is range-bound and bearish. We get a trading range and a good spike in channel clue to work with tomorrow on crude. The E-mini S&P is range-bound and bullish today after the buyers were able to hold above that somewhat important 1900. But we have a key level of resistance overhead, and I want to see these buyers prove it. That's going to be where we're looking for those easy selling opportunities up at the highs of that range if these buyers can't prove it for Friday. We get a really big plan for the S&P for you guys tomorrow. How about the gold? The yellow metal is bearish, bearish, bearish. This thing will not just get up off this low right now, but it's sitting right at a measured move support level, a big-time support level, which means really we're waiting for a bullish correction up off the lows for the best selling opportunities on Friday. Not much has changed the latter half of this week on gold, so hopefully we'll be checking for a pulse tomorrow morning on the yellow metal. How about the euro? The euro, the 6E, is range-bound and bullish, coming off the lows of the range. We're about halfway. We talked about last night's newsletter, and we're looking for buying opportunities up to the range highs before we look to sell those highs right back down on Friday. Guys, we get a jam-packed newsletter in store for you. You get a plan for tomorrow's non-farm payrolls. Before we jump into today's charts, though, I do want to remind you to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel right now, that's wonderful. Lots of great videos there. But make sure you follow the link in the description of the video. Head over here to Sideways Markets. Here's why. First of all, if you're not a member of School of Trade and you'd like a free pass, come out and attend our trade room as a guest. We'll be opening up next week to guests. Grab your free pass in the upper left-hand corner. Lower left-hand corner, right above my ugly mug, you'll see a spot to register for our nightly newsletter mailing list. This way you never have to worry about missing another one of these newsletter videos ever again. All I need is your name and your email address, and then make sure you check your inbox. I'm going to send you a verification email to make sure we give you approval to keep sending you emails in the future. And I'd like to make sure you're a human and not a robot. So make sure you check your verification email on that after you register. Right below the video tonight, you'll see a spot to download all the charts from today's video. Nice little perk of going to our blog here. Now you'll have all the charts on your own computer for tomorrow. And then on the right-hand side, you'll see a spot to register for our trial membership. Learn more about what it means to be a member here at School of Trade, and of course, read member reviews and get help every step of the way. Guys and gals, we get a great plan for you guys here. Now that you know the who, what, where, when, and why, let's jump right into those charts here for today. Starting off the evening here with our nightly newsletter on crude oil. Crude oil is range-bound and bearish this evening with a trading range and a spike in channel to work with tomorrow. We can see the original trading range is still in control this evening after that big move up and then whoops, slipped all the way back down. So we know that this trading range is going to be important. Today's bearish spike in channel tells us to look for selling opportunities after a correction higher, most likely back up to the highs of this range around that 46, 66 area here, right, that 46 even area. So here are the notes we have on crude going into tomorrow. Now remember, everything we talk about tonight, we're going to have to trade around that non-farm payroll report tomorrow. Tomorrow's non-farm payroll report, and don't forget, this is the biggest news we get. It's borderline as probably more important than your average FOMC report, right, which we get every or 8 times a year, right, almost semi-monthly. So tomorrow morning, non-farm payroll is out at 8:30 a.m., 8:30 a.m. tomorrow, that means we're really sitting on hands from about 8 a.m. tomorrow until about 8:45 a.m. Eastern time. The most important thing is tomorrow morning before that news comes out, you're going to see this thing real slow. So that's really the big concern. You know, between midnight tonight and 8 a.m. tomorrow morning or 8:30 tomorrow when the news comes out, you're really going to be careful because, you know, a lot of speculators are going to be staying out of this market until they know more about non-farms tomorrow. So keep that in mind. Before 8:30, very, very difficult to tell what's going to happen before 8:30. Then we watch the news come out. We watch the reaction. Again, about 10 minutes afterwards, you know, 8:40, 8:45, things will start calming down, and then we'll go look to execute our plan for tomorrow. Okay, that's the hardest part. The hardest part is going to be staying patient until after the news comes out. You might see a little bit of opportunities beforehand, but just be careful that usually the volume is quite low ahead of that news report for tomorrow. And as always, we'll be trading this market and all the other markets tomorrow morning live in real time in our live trade room. Here are the notes here on crude. First of all, we definitely have a trading range, right? This trading range, been watching this range all week this week. Every time it goes up, we'll sell it back down. Every time it goes down, we'll buy it back up. Fade the breakout, fade the breakout. You look at the volume profile, and you can see on the left-hand side here that we are straight balanced at $45 a barrel. So that's ultimately the most important thing going into tomorrow, is that if it goes up, we'll sell it back down to 45. Goes down, we're looking to buy it back up, right, to 45. Now, in comes the next big clue, the spike in channel. Today's spike in channel, this was a little bit of a slippery market, if you recall, right? We had this huge measured move up, right? Stop buying, make them prove it. They couldn't prove it, and they slam right back down. When they slam back down, we get the spike in channel. Now, because you guys watch my newsletter every evening, you guys are experts on the spike in channel, and so much to the fact that you know that your typical spike in channel is going to correct back up to the base of the channel before coming right back down, and then we have a measured move, A, B, C, D, right, that will give us our target. Now, I don't know where this is going to go tomorrow, but what I do know, though, is that when you combine the trading range, right, buy the lows, sell the highs, buy the lows, sell the highs, fade all breakouts until proven otherwise, combine that with this bearish spike in channel, and now we have a bearish tone, as if we didn't already, come on, right? We have a bearish bias to it. We love the idea now of a correction back up into this area here, right, at the base of the channel for the next leg down. Now, we got major news tomorrow, so don't be surprised, right, if it tears right through it, makes it look like these buyers are going to the moon, and then we see it come down. So I'm not totally convinced until we really start making highs and stay going higher tomorrow, right? I'm going to be very, very bearish here because of that spike in channel. The only scenario where I'm bullish is if we just run to the downside. Then I'm going to be looking for seller failure, and guess where we're going? Back to 45, right? So the only time I'm bullish is if we just slip and fall. Then I'm going to be looking for those sellers to try and fail, right? So anticipate sellers coming in, chasing the move, and if they fail, that's where you want to be buying it. Back to where? Back to that volume profile, right, at 45. Okay, so 45 is the balance point tomorrow. You know the plan for non-farms, right? 8:30 is the news. We're not going to start trading this thing until after at least 8:40, right? I always recommend at least about 10 minutes after that major news comes out. Shall we keep going? Let's go to another market that very much excites me for tomorrow. This is the E-mini S&P. Now, rewind the tape, go back to last night's newsletter, and you recall last night we said they had one of the worst third quarters in the history of the S&P. I mean, you got to go back to the Great Depression to see a third quarter that was this pathetic for the E-mini. So possibly a statement day today, and I don't know, right? We literally took off. This is a 25 handle move. Remember last night, right? We had this shorter term channel drawn in. Remember that from last night? This was a 25 handle move. Most S&P traders would love to get 25 handles in a single day, let alone before 1 a.m. Eastern time. So that was a statement in itself. But then what was incredible was that we went right up to the beginning of the week's high, right? Range rotation target, 27.5. Back down. You can see the buyers tried to buy that low. They couldn't hold it, but we were able to keep it above 1900. So the buyers started off with a bang today, measured correction back down, and held going higher. I mean, this is a big deal for the S&P. The fact that it was able to hold above that range, right? Remember, this is the range that you were expecting it, if it failed, to come back down in, right? You're expecting it to get right back into that range and get cozy, right, in this 1886 to 1866 range. That's really what should have happened after these buyers failed, right? Measured correction back down, and then whoop, range undershoot. That's what gives me this bullishness here today. But I'm telling you right now, though, I don't know if I buy into the bulls here just yet. I don't know if well, here's the deal. If we're going to hold that measured correction, hold above 1900, I got to see some proof. I really want to say I'm nothing but a bull tomorrow, but I'm a little bit skeptical. You take a step back for a second, you can see a little bit of a head and shoulders here. Right, I'm not a big fan of head and shoulders. They're not very effective in today's marketplace, but it's a little bit difficult not to see that. So we're range bound overall. Really, in all reality, this is just one big range, right? That's all this is. This is one big range. We start off from the high, go down to the low, double bottomed, all the way back to the high, and then again, like I said, at this point, we should have been rotating back down to that low. We held right about the 50% of the range. So it's very easy to see these buyers, they definitely demand our respect. But I think we're going to have to prove a little bit more here. I'm really focused on this 1930 area. This 1930 area, in my opinion, is really going to be the make or break point for these buyers tomorrow. And I really think the easy money is going to be if these buyers fail. I think that's where the easiest money is going to be made. Don't get me wrong. I won't be surprised. Tomorrow is non-farm payroll Friday. We saw very strong manufacturing, very strong retail sales, very strong auto sales this week. We've got Yellen talking about an interest rate hike later on this year, still in the month of October here. So, I'm telling you, tomorrow could be that breakout, I'll show you who's in control type of day tomorrow. Really could. And so we'll be looking at that potential bullishness all the way up to that big high at the top of that bull channel. But I'm telling you right now, though, they're going to have to prove it. They're going to have to really prove to me that they can handle the responsibilities above this 1930. And so here's what I'm looking for tomorrow. I'm looking for, because they held, right? Buyers are running this price up to the range highs at 1930 before a measured correction back lower, right? So that was held above the trading range, which is now giving the bulls a new opportunity to grab control into Friday. But smart traders are going to watch here. So the notes at the bottom, measured correction off the highs. We're now looking for range rotation back to the highs, and that's where we're going to be looking for those buyers to fail. That's the key component tomorrow around that 1930, up around those range highs. I'll be watching for buyer failure up around those highs tomorrow, just treating it as one big range. What I'm looking for, though, is if we don't see buyer failure, is to see two tries, a significant second try, and then stay above 1927. So here's the two most important things for tomorrow. You have to have a gut feeling right now. These buyers are going to find a way up to these highs, either in the overnight session or the early morning tomorrow morning in London, right? They're going to find their way to the highs. If they don't, it's extremely bearish going into tomorrow's session. We know we're going to look for those buyers to try and fail and sell the high. This is just the range high. And then we'll look for rotation back down to that range low. How do we know when to trust a breakout? How do we know when these bulls have successfully broken out? I'm going to make them try and stay twice. Once you see two significant attempts by the buyers and we stay above, here's the number, 1927.5. We stay above that level, we're going to be bullish. But we sink back below 1927, and all of a sudden, those buyers are going to start bailing on those positions. The sellers are going to smell the blood in the water, and they're going to sell this right back down. In my opinion, this is going to be really challenging to be able to anticipate when we have a successful, reliable breakout at that high. It may be very easy. It may be blatant, 1, 2, and we may be gone. But I'm anticipating it being a little bit more difficult than that. Like I said, the easy money is going to be made once, twice, sell right into those buyers, stop losses. That's the easy money tomorrow. That's what I'm going to be looking for. The hard part is going to be, when do we trust the breakout above that 1927? I'm looking for 2 tries. The second try must be significant, and then that will be enough. As long as we stay above that 27.5, that'll be enough to stay to the buy side. And then really your target is up around that 1956. Just make sure you're careful. Don't buy into that measured move. Don't buy into that channel high in tomorrow's session. All right, guys? Careful from the buyers here. Careful on the S&P tomorrow. This is a market that, well, here's the deal. If the non-farm payroll number comes out amazingly bullish tomorrow, then bad news is good news. Good news is bad news. It will tip the hats to all the skeptics out there that are talking about interest rates in October, right, late this month. So you've got to really be patient tomorrow. If we get a strong non-farm payroll number, immediately traders are going to start thinking, okay, Yellen's going to hike rates now. What does that do for the equity market, right? The cheap money's more expensive now. It's ultimately throwing cold water on this fire right now. And so there's a lot of different ways you could speculate. I'm not going to speculate what this news is. I'm going to be patient after the news comes out, and I'm going to watch and stay patient. There's no harm in being a little bit late to the move tomorrow if it means I don't want to guess. I don't want to guess. Tomorrow is not the day to be just letting it fly, so to speak, right? If you like the money in your account, that is, right? Tomorrow is all about capital preservation. It's one of the biggest news reports we get, and people do crazy things around this number. Now, we go from what's probably the hardest market, the S&P for tomorrow, to some of the easier markets, the gold and the euro. Here's the plan for tomorrow on gold. Gold is a slouch. Gold needs to get up off the couch and get moving around here right now. You can see what's happening. We're in a bearish environment on gold. We have a measured move, a significant measured move down. We're sitting right on top of the highs of a trading range expansion. No wonder it's having a hard time going lower. Here's the never-ending struggle in a trending market. This is why you're going to hear people like me say a trending market is more difficult to trade than a range-bound market. It really is. I'm going to show you a range-bound market next in the euro. That's a piece of cake. Trending markets are tough because really, and they're easy in hindsight. Let's not joke around, right? Trending markets are easy for all of the hindsight traders. But here's a situation where we have a measured move down. I know I'm bearish, but I can't sell this low, right? This is the hardest place to be selling. I want to wait for a correction up off this low, get the buyers to try and sell right into that buyer failure. That's the easy money in a trending environment. The hard part is the patience, right? It's difficult. It's not easy to stay patient when all you're thinking about is what if it goes lower? What if it goes lower? And then the problem is, if it goes lower, then you're trying to sell the low of day, right? You're trying to sell the low of the week. And that's psychologically challenging for an experienced trader. For a new trader, it's easy to sell the lows. You don't know any better, right? It's like being a 4-year-old and grabbing a hot flame, You don't know any better. You don't know what's going to hurt. But experienced traders, how many times have we just been our heads taken off by trying to buy highs and sell lows, right? If you've got anything more than a few months of experience, you know better than selling the low. So you've got to stay patient. That's why I've been saying this week, the best opportunity going into now Friday's non-farm payroll, and remember, when you think non-farm payrolls, you're thinking interest rates. When you think interest rates, you think dollar. When you think dollar, you got to think gold, and then the euro's coming up next. So we definitely have a market that's highly susceptible to this reaction tomorrow to the news. We have a clear bear channel, a measured move, and a trading range. The best selling opportunities will come after a bullish correction. I'd like to think we're going to get the easy one, a measured correction. AB equals CD. Make it easy on us. But again, tomorrow's non-farm payroll Friday, so who knows? We may not get the easy one tomorrow. So we know the best opportunity is going to come after correction off these lows. The measured move makes it very challenging to want to sell without a correction. But if we do get a sell-off after a without a correction here, then what you have to be looking for is, this is the hard part, you're going to have to just deal with the fact that this thing may take off the downside. Then you got to wait for that next correction and use the channel rotation. It's very, very simple. This is a very simple situation. If we take off the downside without a correction, right? The ideal is I want to see that correction, measured correction, so I can sell at a much better price. But if we don't get that correction, then what? If it just takes off the downside, do not chase that. You're going to have to stay patient to get that up off that lows again and then get back on the sell train again after we get the correction. Again, I know I sound like a broken record right now, but trust me, if you're a new trader, you take my word on this. Once you get some experience, you're going to see how challenging this environment is. Patience is the name of the game, right, in tomorrow's session. And also, too, be careful on this one before tomorrow morning's news comes out because, again, gold is highly susceptible. And then the winner of the easiest market of the week this week, I love the euro. The euro continues to impress me. I'll tell you, for the last few years, though, the euro has been hell in a handbasket. Locked me up in a padded cell, cuckoo crazy, this market, just because of the yo-yo of the US dollar, right? Well, now the dollar's found some sort of solid ground here, and so the euro's become a whole lot more reliable. It's become a little bit less Van Gogh, right? You get the point. So the euro, easy. Here's a trading range. I'll take these all day long, right? You go up to the high, you sell it back down to the low. Go down to the low, you buy it back up at the high. You go to the high, you sell it back down to the low, rinse and repeat. And of course, every time we try to break out, we're suspicious and we wait for them to fail and we buy the break at the low, we sell the break at the high. It's a cookie cutter, again, rinse and repeat. If my trader's heaven, right? When I pass on someday, I'm sure you guys will all miss me, of course, right? When I pass on someday, I hope they put me in a nice plot in a range-bound market, right? Because that's where I want to go. That's my trader's heaven. That's the easy stuff. The hard stuff, honestly, for an experienced trader are those strong trends because you've been programmed, you've been experienced enough to know it's difficult to want to buy the highs and sell the lows in a strong trend like you're seeing on gold right now. So here we are. Most important thing on the euro right now, trading range. Okay? So we're looking for range rotation. We talked about this last night. Really nothing's new. If you recall from last night, my exact words were, be ready to fade that breakout. And that's exactly what we did, right? Fade that breakout on the way up. And then if you recall from last night's newsletter, we talked about this phantom trend line, right? And remember the spike in channel? Remember that from last night? Okay. So this phantom trend line is really doing exactly what you'd expect it to do. It's causing a little bit of resistance. That's why I said you just got to be careful buying into it. So what you want to do is wait for sellers to fail, right, and finish the buy job back up to the high of that range. These trend lines, going on what I said last night in the newsletter, this is just a reminder that when you find yourself in a trading range like this, those channels, they're not worthless because they actually do make for great targets, and they also do make for excellent opportunities to catch the sellers thinking they're important, and again, just buying right into their stop losses, right? Easy way to add another entry on the list. So we know we have the trading range, range rotation. We're still waiting for that range rotation. Look for the measured correction back higher. Okay, use the ABCD. That'll find your best target. It might be around that 1278, 1264, but the ultimate target is back up to these highs, right, to test that 1290. Think of it like a game of tag, right? Oop, the buyers have it, tag, you're it. Oh, sellers have it, tag, you're it. Buyers have it, tag, you're it. Sellers have it, down to lows, tag, you're it. Buyers take it, right? Sellers take it, back and forth. It's going to try to achieve that objective of rotating back up to those highs. Last thing. Take a look at the trading range. Where's the volume? I get a volume spike here and a volume spike here. So we clearly have a very well distributed volume profile. It's not perfect right in the middle, but it is definitely, you got a little bit of a Tetons going on here, right, where we got a spike at the high and a spike at the low. The bottom line is this market is balanced. It shouldn't be a surprise. We've been in a range all week. This is not that big of a deal. Finish the job to the highs, and then we'll look to sell down to the lows. Just don't get too aggressive at these highs. Fade it back down. Go down to the low, fade it back up. Now, remember what we said earlier about the S&P? If it goes to the highs and tries once, tries twice, and then stays above, that's your cue, right? So make sure you stay patient. What I always tell our clients and our members in the trade room is make them prove it. If you're going to try to buy the breakout or sell the breakout, make them prove it. If it's strong enough to break out of this range, you're going to get plenty more buying or selling opportunities. You don't need to be the first one in on that move outside this range. So stay patient and focus on fading those breakouts in the session for tomorrow. Guys and gals, I cannot overemphasize the dangers that are waiting for you tomorrow around that news tomorrow. So wear your helmet, fasten your seatbelts. I'm half joking with you, but be careful tomorrow. Tomorrow's 8:30 a.m. news is the biggest news we get as traders. You don't need to be a hero tomorrow. And I'll tell you guys the same thing I tell all my clients. Until you've seen a number of these non-farm payroll reports, they're the first Friday of every month, unless the first day of the month is a Friday, okay? So they're usually the first Friday of every month. Until you've seen a few of these non-farm payroll reports, right, in your experience, best to let the professionals do their work tomorrow. Tomorrow is a day where you've really got to be patient after that news comes out, because it's either going to be really fast or really slow. And either way, stay patient. You guys have a plan. Tomorrow morning, I'm opening up my trade room at 8 o'clock in the morning Eastern time, and we are going to execute this plan together. You know the plan. Trade room opens up tomorrow morning. Come out and join me. Now remember, I don't do the newsletter on Friday afternoons. They do let me out of my cage every once in a while here in School of Trade headquarters in Los Angeles. So I'm going to get out of the office tomorrow afternoon. You should do the same thing. Careful trading on a Friday after 11 a.m., right? Early in, early out on a Friday. It's kind of a half day on Fridays for day traders. And don't forget, share this information with a friend. Pass on this newsletter video to a friend of yours and come out and see us tomorrow. If you got some time, join the free trial right on the website. You'll learn more with me in 1 week on my free trial than anywhere else on the interwebs. And please don't forget, we have someone standing by 24/7, 365 to answer all of your questions. Guys, being successful as a professional trader is very simple. It's like opening up a combination lock. It's not enough to know the numbers. You got to know the sequence. Lots of people know what day trading is, but what do you do first? What do you do last? What's important? What's irrelevant? That's what we've been doing longer than anybody else on the interwebs here at School of Trade. Guys, I'll put my money where my mouth is. Join the free trial. I'll show you what we're all about here. Call the office. Send me some feedback. I'd love to hear how your week went, and I'd love to help you guys do this the right way. My name is Joseph. Oh, by the way, last night's video, finishing school, huh? Finishing school. I loved hearing from you guys from last night's newsletter. That's exactly why I do this. I love helping new traders. I love being a part of your career. So thank you so much. Great job this week. Excellent work here today. And be careful there tomorrow. I'm out of here. Adios, amigos. Bye-bye for now.